As Bartosz mentioned, this is the second in the series of webinars that are devoted to analyzing microfinance business models. Today we'll be talking about what I call adapting, and I will explain what I mean by this. We will talk about briefly about business models in microfinance. Then we will discuss various strategies and options for adapting the business model to the changing situations. We have excellent two cases today, very interesting cases, studies which I will introduce, and we will end up with questions and discussions. Today, our guest speakers and cases are from two parts of the Eastern and the Western Europe. From Western Europe, we have Dirk De Witt from Microstat in Belgium. He will talk about how they have been actually adapting to the changing situation. And from the other side of Europe, Eli Minciu from Omro Fibo, who is the head of sales and partnership, who will talk about how they did it. And so let me start quickly with a quick overview of microfinance business models, kind of 101. This whole series is based... Sorry. The series is based on research which have been conducted by Microfinance Center in Poland, which was supported by MasterCard Center for Inclusive Growth. And the questions that we have investigated was to see, well, first of all, we wanted to understand the business model. We talk about a lot of business models. This is very often discussed, but we wanted to be more analytic, understand how MFIs create value for customers, how they position themselves in the market. So one option, so the motivation was to really understand the business models, and specifically in the context of other recent pandemic, COVID-19, as well as the changing and the need, the changes that actually the COVID introduced, especially related to digitization and using technology in microfinance services. The paper is ready. It's available on the MFC's website. You're very welcome to read it. It's a long paper, but hopefully you may find some sections useful. Now, when it comes to a business model, in its simple form, it is a design of a successful operations of the business of a microfinance institution, which identifies revenue sources, customer base, products, forms of financing. But as such, is really not necessarily a business. It's not a business plan. It's not really a revenue model. It's something more. It's a combination of various building blocks that together, the interaction between those building blocks really define the business model. And there will be different, depending on this, of how these building blocks are combined, we may have different business models. What you see here is a version of business canvas approach, which I simplified, and we have identified actually 6 components of building blocks of a business model for microfinance. One is value proposition, organization, customers, activities, delivery, and financing. I will talk about it in a moment, because that will how you can use how we can use each part, each aspect of a business model for adapting and changing. What we have looked also in the paper in doing the research, we have looked at how microfinance institutions are using digital technologies, and we have identified, not surprisingly, that some MFIs are still using a very traditional. We call them analogs. Like some of them are very progressive, and there are new entrants in the market which are fintechs, and there's a lot institutions in between, which we call them hybrids or ambidextrous. Ambidextrous, for those who struggle with the word, is those people who use left and right hand very well. So there are different levels of digital maturity, and also we have found out that there are different ways how microfinance approach and react to changes. Last week we talked about about what we call pivoting, where we have looked at cases where microfinance institutions made a major jump towards new business models, which are ecosystem based. The different ways they really radically change how they operate, with not only as a solo individual microfinance institution, but as a system or a part of a larger system, interconnected system. Now, but today we'll be talking about adapting, but next week we'll be talking about transforming. And the last in the series of this webinars will be devoted to innovations and introducing brand new model fintechs into microfinance institutions, into the microfinance space. Now, coming back to now, moving quickly to our core topic today. How do we? So if we look at the organizations which are somewhere in between the hybrids, those which change, they're not necessarily analogs, they're not necessarily the fintechs yet, but the ones which are operate within have been existing for a while and then make changes. The question: how do they combine the new changes, the changes with old existing business models? And by the way, this is, of all the groups, this is the organizations which evolved in an adaptive way, is the largest amount of microfinance institutions. So first of all, so I divided this topic, the combining, into three sections: why we do it, why we change, what we change, and how we change. So in terms of why, obviously it can come from maybe different reasons. It may be customers, it may be changing market, or obviously technology, competition, efficiency, lack of workers. We experience, like everybody else, shortage of people who would like to work in microfinance. It may not be as popular as it used to be, and also policies and regulations may require changes. So there is a number of reasons. It would be interesting to, when you're listening to our presenters and cases, to see why they made the changes. What was the driving force behind the changes they introduced? So that's one part. Now, when it comes to what you change, well, we can actually look at the 6 building blocks of business models, and we can change them, each of them or all of them, or in some shape or form. The value proposition, what we have found out, was obviously didn't change a lot. It can be, when we talk about value proposition, what's the core purpose of MFIs is usually either social, commercial, or mixed. Most organizations have, some of them are purely commercial, some are social, but the majority actually have a mixed purpose, and they may actually correct the purpose and refocus. However, it has not changed a lot, especially in the last, even during the COVID, even with the change of adoption of technology, going into new ways of doing things. Actually, we don't see a lot of change in purpose. So that's one. The second aspect that you can change is organizational forms. Okay, obviously these changes are not happening a lot, although some organizations may have changed organizational structures. What has changed with some organizations is their affiliations or their partnerships. They also have introduced better systems for organizational resilience and introduced business continuity plans. Bartosz was talking about the series of webinars devoted to business continuity, which turned out to be a very useful tool for those organizations which have them, which effectively apply them during the pandemic to ride through the difficult time. Now, the third component of the business model which can change is customers, whether it's old customers, new customers. We have seen some changes in the composition of customers. For example, some new customers were added to the mix because they had no choice. Some people couldn't, or some businesses could not borrow from traditional sources, and microfinance institutions were the source. Whether some organizations have gone to new segments and served, for example, because money was available through government programs for some businesses or for some segments which were not traditional or were not served by microfinance institutions. And also, there have been some changes, or can be changes, in non-financial support for clients, like business development services and access to other information. And I think it will, I'm sure we will hear from MicroStart how, for example, the non-financial services have been included or changed during the pandemic. A lot of, probably the most changes have actually, quite a bit of changes have taken place or take place in what I called activities, but really we're talking about financial services. And new financial products are developed all the time and also adjusting. And in a lot of these products are becoming digitalized and delivered in a different way. And also, more increasingly, microfinance institutions are introducing other financial services, for example, payments, directly or indirectly through partnerships. The biggest probably change has in recent years, due to technology and also due to the COVID pandemic, took place in delivery section. So how a lot of organizations have, I mean, microfinance traditionally is a relationship-based loan officer working with clients in the field. And that traditional lending methodology is changing towards transactional, more oriented to credit scoring and different ways of maintaining or developing the relationship with clients. But also, and this is what we will hear today a lot, operational systems have changed a lot. So internal systems versus platforms, to what extent, how the internal systems, the back office system have changed and how they influence the lending methodologies and product development. We have obviously observed, and this is an ongoing process, which has been speeded up by COVID, the virtualization of communication, of contacts with clients, but also virtualization of documentation processes. So there's a whole host of activities that relate to where digitalization has changed how MFIs work. And obviously delivery channels integrated, whether how products and financial services are delivered to clients. So there's a lot of changes that have taken place, and today we'll be most likely focusing from our guest speakers about how they have changed their internal operations. And last but not least, actually, there are changes in how businesses are financed. We have institutions have actually, some of the institutions which have never used government funding, for example, have actually had access for the first time to government funding or government programs or special programs. So there's also differences how in accessing alternative financing, like crowdfunding and different other types of funding. So there is also changes happening in financing the businesses. Now, so this is what can be changed. What can be changed, and any part of the business model can be changed in different ways, and the combination between them will define how organizations work. And the last thing I want to say is actually, and again, while you're listening to the cases, think about how the adaptation process is working. Is it what's the degree of changes? What's the scope of changes that the organization is undertaking? An important aspect is also speed. Is it how quickly organizations can change or should change, and how organizations have progressed through the change? Whether the change is coming, what I call pull, what is actually defined or initiated by external forces, or to what extent it's a push from the inside of the organization that feels that change should take place. Change is obviously nothing new. Many organizations use continuous improvement processes, which mean they change constantly, always changing something to make it better, more efficient. And so again, is the change a continuous process, or is it an ad hoc change? And what's also interesting for me, it would be to hear from our speakers to what extent changes that have introduced during the pandemic, during the recent experiences, to what extent they have been temporary, and did you go back to some of those processes, or whether whether these changes are permanent. So those are why we change, what we change, and how we change. With that, I would like to invite Dirk De Witt from MicroStart and I'm going to stop sharing my screen, to tell us what he has done, what the MicroStart has done, and if that's something interesting in terms of adapting to moving from where they have been before. It would be interesting for you, Dirk, to start maybe what you have been before.
Yeah, okay, I will try to share my screen. Okay, I suppose everybody can see my screen. Is it okay?
Yes.
Okay. So yes, some of the slides are in French, but I will speak in English. We are MicroStart. We are in fact a national organization in Belgium. In summary, what do? We have three main missions. We have our vision. So we want to help all people to create a revenue for themselves. And we say that all people have the right to undertake action or to set up a business. Our missions: we finance the people, we guide the people, so we give free learnings, free guidance to our customers, and we also promote the entrepreneuriat. What does that mean? Is that we do lobbying. We do it on the government level, we do it on a local level, we do it on different levels. So the first two parts are towards the customer. The last part is more, it's at the end, it is in the advantage of the customer, but it is with other people. So we talk to the governments, to local governments, to funders, and so on. First part, the financing, is that effectively we provide credits between 500 and 25,000 euro, so that people can set up and develop their own business. We do not only finance them, but we give them free guidance. Free guidance means individual or collective trainings, this before, during, and after the credit we give them. Next to that, you have our values. They are confidence, innovation, solidarity, respect, and professionalism. MicroStart is two companies. It's this is more for administrative reasons and also for the funding reasons. We have a cooperative company who has shareholders who have brought the capital together, and it is in the cooperative company that we provide the credits to our customers. So this is a bit to do with the Belgian law. And then on the other hand, we have an ASBL in which we have placed all the free services that we provide to our customers. So it's the coaching, the trainings, the formations. But let's say to the outside world, this does not make a difference. What did we do? Oh, sorry. So since 2011, we have financed about 6,000 companies. We have provided them with about 6,200 credits. Of the people we financed, 2,380 people were starters, people that started a business. And we have also, so that's the free coaching we are talking about, coached individually or collective or via webinars about 8,500 people. In the 11 years that we exist, 10 to 11 years, we have put 40 million, more than 40 million in the economy. It's about 45 million. And this push to the economy led to the fact that about 6,500 jobs were created or maintained. So we have in Belgium 6 branches. We have in total in MicroStart 34 employees on the payroll. We have about 130 volunteers that work for us. And we have also, next to 6 branches, we have also 10 places where we have permanencies, where some of our advisors are present 2 times a week or so to service our customers. This gives you a view on who are our customers. Which is important is, okay, we have some major attention points. We have about 60% of our customers that are born outside the European Union. 30% of our customers are women. 23% are looking for a job, so they don't have a job for the time being. So I will not go through all this in detail. You can read it afterwards. But it gives you a view. Here you have a view on which sectors do we finance in global. So as I said, we provide credits between 500 and 25,000 euro, where the financing plan cannot be more than 100,000 euro. And the average amount that we give, but this is still the out one, has in the meantime raised to about 10,000 euro. And there you see that on the left-hand side of the slide, the different sectors which we finance, where you can see that the main parts are the different services, the Horeca, so, and different commerces in which we do the most of the finance. Our impact, what is very important is that if we provide financing to a customer, we see that after 2 years, the business that this customer has set up is still existing. So it means that the customer is still there. In the same business, we have an insertion rate of 82%, meaning that from the 100% people we finance, 82% still has generated his own revenue, his or her own revenue after 2 years. And even more important, they have also created not only a job for themselves, but they created about 0.7 jobs, additional jobs. So it means that they have hired somebody and they provide work to somebody else also. Our social return on investment is €1 is a return for the economy of €2.53. What does that exactly mean? If we provide €1 to a customer, well, that customer can effectively set up his own business, can provide his own income, means that that customer gets out of the different help systems, support systems of the government. That customer pays taxes, pays allowances, and it means that to the economy, it has a return of €2.53. However, what for me is more important and is not measurable or very difficult is that the respect you give those people to create their own job, and that they can say in their surroundings that they are not using government allowances, but they are managers. They created their proper job. They are independents. And this is creating the respect for those people towards all the people around them. This is very important. This is not measurable, but it's very important. So this is a short presentation. So what do we do to go forward? And it's more on our IT plan. So we have seen that normally you have a lot of our customers that are really heavy into a personal contact, but also you have people who are more digital and that do not feel the need to have a personal contact or less, and want to go straight ahead through the digital channels to acquire their credit. So in one of the major points of our strategic plan was that we should, besides our actual channels that are really very face-to-face, we should also develop a digital channel. And the digital channel should be end-to-end. So the customer comes into the digital channel, can at any point in time ask the intervention of one of our advisors, but can also go through the digital journey all the way until the disbursement of the requested credit according to different checkpoints. We have created an agenda on all this in 2019, just before the COVID crisis. The COVID crisis did not change that very much, did not change the whole plan, the total plan, but did change the order of execution of the plan. So due to COVID, we have in fact reshuffled the different topics in another way, because there were some topics that we would develop at the end that we have shifted forward. For example, a digital signature, a digital signing, which was foreseen a bit later due to the COVID, where, okay, you could not have contact with the people. We have pushed this forward so that we could do loans in a very digital way and the customer could shine in a digital way. We have created a digital agency that was created in 2017. However, there it was not really, okay, the name was there, but the tools were not really there. As from 2019, we were really going forward on that. That was in our plan. So as I say, our customers should have the possibility to a 100% digital journey. However, the customer can also at any time in the digital journey step out to have a direct contact with an advisor, and afterwards step in again, step out again. It depends on the customer. We want to make it as easy as possible for the customer. And next to that, we are also expanding our physical points of access towards the customers. So our situation until 2020 was that we had a loan system that was not at all integrated. It was called Nova, and it's a good system, but we used it. It's a system from ADI in France, which we used from the startup of Microstart in 2011. However, that system was not integrated in our other systems, which caused some problems. Our MIS system is Salesforce. In Salesforce, we have everything except the loan at that point in time. So I don't know if there are other people who are using Salesforce. However, we have there, let's say, from the beginning of the first contact with the customer is created in Salesforce, and all information, every visit of the customer and so on is available in Salesforce. The only thing we did not have was the details of the loans. Our accounting system is Winbooks. So we had different interfaces between the different systems, but the most important was that we had no 360 customer view, and this is really needed. You need to know that one of our major shareholders is a bank. And if you have as one of your major shareholders a bank, then I think I do not have to explain that you have to apply with the different policies of those banks. And we also have a very strong governance on everything that is KYC, so know your customer, which is increasing more and more. So why did we want to change? Well, we wanted to change to optimize our way of working, because if you have different systems, for example, it's more Nova and Salesforce. For an advisor who has a customer in front of him or her in the agency, they have to go into different systems to, in fact, be able to serve the customer. So this is not so very nice. Next to that, due to the fact that our loan system was separate, we also had a problem on a digital journey to make a full digital journey for the customer, because we could not connect the systems next to each other. We wanted to have a 360 customer view in one system, meaning that you see all the loan details, meaning that you see what trainings did we give to that customer, which contacts were there with the customer, and so on. And this will come back later. It was also needed to have some dashboards, detailed and higher level, to follow up our risk, to follow up our production, and so on. So it's a whole step. We wanted to decrease the workload of our advisors, commercial advisors. We wanted to have access to all customer data in one click. And we also have created an integrated customer satisfaction survey on key moments in the same system. I don't know. Okay, so in 2020, we have worked on a phase out of Nova, our loan system, and it was a project of 1 year where we stepped over with a migration from our Nova system to a new system, which is called Loan Management System in Salesforce from Singlify. The results on that is that today we have we have gone live. It was a project of 1 year and we went live in July 2021. And we have a full view on the customer in Salesforce. So if you tick in Salesforce the name of the customer, you see everything on that customer. Not only the credit, but also the bank account and so on. We also have our funding that is in there that we can connect, because I think a lot of people, in our case, we work with subsidies that we receive from governments, from local governments, from funders, but they need reports on that. You have to prove to what you use their funding. And this is also something we set into Salesforce, and we can make the link between our customers, between what we have produced, to provide a report to our funders. So with really with a click on a button, and before this was always taking a few days of work. Now, okay, you have it in a second. You click on the button and you have it. We wanted to have easy access for our people. If you have a customer in front of you, it is not nice that you have to say to the customer, let's wait, I have to go in 2, 3, 4 systems to have everything. Now, if they have a customer in front of them, they click their name into the system and they have everything right away in front of them. We wanted to have automated dashboards online. So what we did is, okay, to follow up your production, to follow up your risk, to follow up the trainings you have given. Before we had a manual dashboard. To give you an idea, the dashboard was executed by 1 or 2 persons, and they took every month 3 to 4 days with a lot of manual work to come to a static dashboard, and it was with what is usually called proven technology, and that means it was in Excel. So with all the risks you have, if you do downloads out of systems and you have to rework them, all the risks of errors you have. And this we have now automated in 3 dashboards. We have a production and a prospection dashboard. We have a risk dashboard, and we have an impact and training dashboard. I will give you a view on that later. And what we also wanted is to have one truth for all. If you have different systems, it also leads that you have different figures in different systems, which is not always the right thing. So we wanted to have everything in one system, because there's only one truth, and there's a major time gain on that at the operational level for the people who are doing the job on the field, but also at management level. Okay, I would go first. I will try to give you a view on the dashboards we developed. I will not go through everything, but I will give you a view. So here I will give you a small demo of our system. So here you will see that I'm going into Salesforce.
Actually, we don't see it because you're sharing the old slides.
You don't see it?
No, you have to close the slides and share it from. Yeah, you have to.
Dirk, you need to choose share full screen option, not share the window, because you are sharing the window, so we saw only your PowerPoint window.
Okay, I will have to look. Video, share. And I should say...
on the left side of the sharing window. Yeah, now we can see your screen.
Okay, that's better. Now you see that?
Now we see your WebEx windows.
You see Cisco? Yeah, okay, that's nice. So you see a screen where you see some diagrams, eh?
No,
No,
only the
not
white
yet.
background.
All right, then something's wrong. Okay, I should share my content, I think. Oh. It worked. Then I should change my internet browser. Is it that? No.
Now we can see your internet browser. Oh.
I will try. That's a pity. You see my screen now?
No, it's just a plain, a white screen.
That's a pity. Apparently, I have 3 options: share content, share internet browser.
Probably internet. I would go for the internet browser, but
WebEx meeting, share. I can share my webinar. Is that?
No, not okay.
no.
No.
No, you have to tell us, Dirk, instead of showing.
So
Showing, we will share your presentation if you don't mind. And
so what we have done within Salesforce is that we have on. So everybody needs some reportings, and in Salesforce, for example, for all the credits, we have automated, and this is due to the fact that we put everything into one system. We have automated everything that is risk. For example, we have on a live basis, real time, we have our risk, our 48-month risk, our risk per agency, our risk per advisor. We have our production, which gives a global overview, but where we can go into all the details, and we can drill down from the highest level to the lowest level, and the lowest level being on advisor. So we can go down from microstart to the branches, to the advisor, to the customer, only with one simple click. Things we did not have before, and did take a lot of time for the different advisors if they had a customer in front of them, and also to see effectively what is our production. So you have everything in one system. It also provides the possibility for the customer to come in a very digital way without any connections, and very transparent for the customer. And next to that, we have defined, let's say, 4 or 5 key points for the customer, where we ask feedback from the customer. Customer comes into our application and has to go to an appliance of a loan. Once he applies for a loan, we ask the customer, okay, what were your findings? If the customer has received the loan, then we ask the customer in an automatic way in the system, okay, were you pleased of the service? And so on. And then you have, after a few reimbursement, we ask it again to the customer. And then when the customer comes at the end of his credit, we also ask the customer, and this is what is his experience on that. And this is really crucial, because there you take the feedback of the customer, and we see how we can effectively do things better and go forward. To go farther forward on our digital transformation, we still have a bit of work to do. We want to, in fact, take our digital channel, and we want to implement it into our physical branches, meaning that, in fact, our people, the customers or potential customers that come into a branch, they have the physical contact, but the digital part is done by the advisor. So the advisor will do the work for the customer, but it will also be a digital journey. But this is all transparent for the customer. And then we will be on standard for everybody. So we want to have everybody have the same way of working. And once If the customer wants to do it himself, then he can do it. Otherwise, the advisor will do it. What was really important for us in automating all those things, one of the topics behind it is that we are quite a small company. And I think as a lot of all the colleagues here, we have quite a high rotation in people, in employees. Mm-hmm. And this is giving a problem, because if you are not automated and everything is done by the people, when people leave, they explain what they do to other people, or they make a manual, but the manual is not always detailed enough, and you have a lot of problems if people are leaving. Mm-hmm. So what we try to do is we try to automate, let's say, a part of the work, so that everything or most of it is automated, and then people can have more time for interpretation of the reports that come out, which is more important, and to help the customer, because the more time you have to help the customer, the better it is. And this is where we are going to, and all this with the aim to help more people, to be able to help more people, to enlighten or to limit the burden of our advisors, so that they have more and more time to help the customers. And this is important, because at the end, it is the customer we need to help. And if you automate a lot of things, then you can help more the customer, you have more time for the customer, and you can also identify which are the points, the weak points, where we can do more. And this is where we are going forward with. So I will stop here. I can keep on talking, but...
Oh, it's fascinating. Thank you very much, Dirk, for sharing your experience. So maybe we'll come back later after Emil makes his presentation, because I'm interested. Obviously, you have said how many different changes have taken place because of what you have done. You've been motivated by, obviously, by the fact that you're a small company, that you have a lot of changes, and you have to kind of solidify and keep intact. So it's not people. So it's not so people dependent, that the system is actually has the information is retained in the system, and you maintain the continuity. So there's lots of, so you lower the risk through doing this. But we'll be interested why you choose Singlify as a platform as opposed to developing your own, and how you made your choice. But let's hear from Emil, who is from Omro, Romania. Omro is, for those who don't know, it's one of the oldest microfinance institutions in Romania, and so I'm curious, and it has leaped forward. So we're very happy to hear what's new in Omro and how you have evolved.
Okay. Hello, everyone. Piotr Bartosz, thank you for the opportunity to share some information related to our company. So let me share the presentation that we have prepared. Just give me a second. Piotr, can you help me just confirming if the presentation is already posted and it's live?
Yes, it is. You make it in the slide view.
Yes, in a second.
Yes. Perfect.
Okay, perfect. Thank you. So we will play with two names, Omro and Fibo, and from the start, as the title of the workshop or the webinar is related to old business, new model, stuff like that, I will tell you a little bit about Omro. Omro is one of the oldest MFI in Romania. In 2 years' time, we're going to reach 30 years. We have more than 12,000 customers in that period, more than 80 million euro disbursed to our customers. So it's a very old company, which on the last 4 years and a half witnesses some big transformation. We have a lot of partners coming from European Commission, European Bank, European Investment Fund, National Bank of Romania, Stock Exchange in Romania. We started in 2008 with a new ownership, because the previous stakeholders, Opportunity, for some of you, Opportunity is one of the biggest names in the microfinance sector. They used to have in Romania a huge operation. They left in 2017, and a new structure emerged in January 4 years ago. So we have here some figures related to Omro, which is the new name of the company after Opportunity left Romania. As Dirk mentioned, we have some similarities, at least in terms of employees. We have almost 35 to 36 employees in the whole company. We started 4 years ago with 12, and we increased year over year. The portfolio, it's around 11 million euro as we speak. And in terms of customer satisfaction, we do take some survey, which are twice per year. And according with the last one, which was performed in November last year, we reach a 80 NPS score. And in terms of satisfaction, it's almost perfect, meaning that 9 of 10 customers recommended Omro to new customers. In fact, something like 55 to 60% of the new volumes disbursed every month are coming from existing or recurrent customers. So this is Omro and Fibo. I will go now move slowly to what it means. Fibo is the digital brand that we created and launched in May 2020 as a site in the beginning. And I will give you more details related to Omro before skipping to Fibo and the tech part of the presentation. So, new shareholders in 2019. After that, we started with the European Investment Fund, different partnership. We had a capacity building. We have a senior loan from EIF. We started with getting loans from local banks in 2019. Afterwards, we moved to share with lenders from outside Romania. And 2 years now, we have Impulse from Belgium as one of the stakeholders. We launched 2 series of bonds on the Bucharest Stock Exchange. The first one actually in 2020. And the last one 1 month ago. It's one of the last thing shown in this slide. So in terms of funding, and I will make some comparison with what Dirk mentioned. We don't have a bank as a shareholder. We take the funding part from different sources: bonds, local banks, EBRD. That was signed in the last quarter of 2021. So we mixed a little bit the funding part. In the meantime, 2 years ago, as I mentioned, we launched Fibo. And the first time in May, it was launched as a site. And I think everyone knows, when you have a site, you just browse and you get information and you read different stuff. In November 2020, we moved from site to a platform, meaning that you have a username, you have a password, you have different information which are related to you as a user of that platform. What is the opportunity? Why are we moving into the online part of the business and moving slowly, but not closing the traditional part? We see a huge opportunity in terms of number of the micro companies which are not reachable by the banks, and I put some figures just comparing the European Union with the figures related with the CEE, Central and Eastern Europe, where Romania lies. So we see a huge gap in terms of opportunity. A very large number of companies which are not bankable, and some of them they are not even know about the fact that they can have an opportunity, a very transparent and crystal clear one for financing. Moving from the CE numbers, I will go to what it means in Romania. So we have close to 1 million. It's 1.3 million, but let's say 1 million companies, out of which 800,000 are companies we can target. We can dream that we can have as a customers in the next, I don't know, couple of years. Half of them are micro companies, half of them are freelancers. And in the meantime, we have 100,000 and something new companies registering every year. Even for the last year, there was something like 70,000 new companies registered in Romania, which is a little bit lower than the previous years, and I think it's due to the pandemic in the most of the cases. Opportunities. 1 of 8 entrepreneurs in Romania get finance from a bank, meaning that we have a huge opportunity. At least 7 of them can take a credit from a microfinance institution or from a factoring institution or different other opportunities. And the average time that you get a loan in Romania as a company, it's I think it's 5 to 6 weeks. We just mentioned here that it's a 4+. So when you see these kind of numbers, we had wondering what you can do in terms of accessing pretty quick the necessity or the needs of these customers, and what can be done in order to reach that 7 companies that are not bankable, comparing with the fact that we have something like 5 to 6 branches, like MicroStart. So the number of the people is the same, 35 people, out of which 11 are in sales. The problem that we trying to solve with Fibo, it's the time of the entrepreneurs. So these guys, our customers, spend a lot of time with dealing with different issues running the company, and most of the time, I think it's comparing with what it's the counselors. Most of the time, it's spent with administrative tasks. You chase different lenders to get a loan. You get the papers to the accountants, and different other issue, which I will put it in a general basket as administrative issue. You do not spend enough time with your customers, and that in order to increase your business. So the thing that we put, the main benefit that we put for our customers is time. And remember that I said usually in Romania the average time it's 5 to 6 weeks. We managed in December last year to have an average time of disbursement to 6 hours. So from the time we get all of the documents from the customers and we have done the KYC, we managed to put the money in the account of the customers in 6 hours. That was in December. Compare that with 5 to 6 weeks, on average from a bank. So let's share with you some words about Fibo. And before moving to the different issue related to the Fibo, I must say that we took 6 weeks in May 2 years ago to launch the beta version. We started in the mid of March and we launched it something like beginning of May. That was the first version, the first MVP. It was via site fibo.ro. Which are the value that we share with our customers? So first of all, it's related to the speed. The average time that we disburse a loan, it's public on our site. So every 2 days, I think, maybe I'm mistaken, we update the time we took until the customer get the papers, send the papers to us until we put the money into the account. So everyone, every customers, every partners, even you, if you go to fibo.ro, it's in Romanian, but I think the figures, they will speak from themselves. You can see the average time that we managed to have month to date, that's that month, until we get a loan to be disbursed. It was 6 and something in December. We promised less than 24 hours. That's our promise to the customers. But since 6 to 8 months, we are over delivering, meaning we have 6 to 8 hours. And in January, I think it was 10 or 11 hours. Why Fibo? First of all, is related to the speed. Second of all, comparing with all of the traditional process that we have in a bank, we only ask for 2 documents. It's an account statement from the bank, and it's the balance sheet, the latest balance sheet that the company has. You can upload it. It's not it's not a assisted flow. The customer has to perform all of the operation within the flow by himself. He has to upload the documents, only 2 documents, and in a certain period of time, June to September, as is stated over there, we only ask for 1 document. Because in May, in Romania, it's a legal obligation to upload, to send via your accountant, the fiscal document for the year that was closed previously. So only 2 documents, and in less than 10 minutes, you have an offer in principle, meaning that you see the amount, for the amount that you choose, what is the installment, what are the costs, what are all of the commission, interest, commission, everything, and the monthly installments. Because this is the only option that we have nowadays. It's not a flexible repayment scheme. It's even 12, 24, or 36 months, but it's an equal monthly installment. We do not ask for any collateral. The only guarantee that we ask from the customer is the personal guarantee. And that is because we have an agreement with the EIF, and we operated on the EaSI guarantee scheme, which is available for, I think, is more than six years now. We started in May, and all of the loans that we disburse via the Fibo platform have backed the EaSI guarantee. And one of the latest solutions that we launched in October and November last year is the embedded finance solution. I will not get into the more details over here. It's a business-to-business offer that we made for different partners, meaning, in a nutshell, that let's assume you are telecom companies and you have business companies as customers. We can plug into your platform, and the entire flow that is on Fibo, you can say you can follow on the telecom company of your customers you are. This is the embedded finance. You can offer the Fibo in every platform, on every site. It's just a matter of technical integration and agreement with the same company. I don't know which is the usual setup for this kind of webinars, but if you have questions, you can interrupt me anytime. To be very specific and very condensed, I described over here the entire process which is happening in Fibo. So the first part, the first line with the green, it's less than 10 minutes, meaning that you have to create, have to enter into the platform, and using your email and phone number, you can have an account. Afterwards, you can play with the product selector, and depending on the amount and the tenor, you select what you need. You answer to 3 to 5 questions, and in less than 10 minutes, you have that in principle offer, showing you the installments, the interest, the commission, everything. Afterwards, it's up to you to upload that 2 documents to perform the KYC, which is via third-party supplier. It's not our it's not our platform. We are operated with a partner from Italy. You upload the ID and you perform some live detection movements, just to attach the administrator of the company with the company that you created in the beginning. The last part, it's where the customers do not have any contact with the sales guys. So this product request goes directly to the risk analyst. It's an interview, 12 to 15 minutes. And afterwards, if the loan is approved, we have a digital signature, which is performed with another third party, with the customer using the email and the phone number that you that you use when you create the account, and voila, this is the up to 8 hours that in the real time you can get the loan. You can apply whatever you want, irrespective if it's Saturday or Sunday, irrespective of the hour. You can upload the documents whatever you want, and up to 12 hours you get the money into your account. Few words about the embedded finance. We launched it in October and November last year. I think it's one of the first at the Romania level, a solution for the companies that are members in a marketplace. When you look into the right part of the slide, it's a picture from one of our partners, which is a marketplace, business to business, where we can say you can choose at the end of the journey, after you selected all of the products, you can choose to play with Fibo, and you can have an access to what it means of buy now, pay later solution, meaning that you as a reseller or maybe a Horeca, you can take the merchandise and you can pay in 60 days without any cost. If you cannot pay the entirely amount in 60 days, you can have the option to pay in 6 monthly equal installments. This is our approach to buy now, pay later, only for marketplaces. Everything is done the app is developed by our team, and the platform that is developed entirely starting with 2020 from our IT team. Some figures related to the product that we have on Fibo: amounts, tenors. As I mentioned, we only ask for the personal guarantee of the administrator, because we have the EaSI guarantee in the back. And comparing with what Dirk presented you, we started 3 years ago to build our own core banking system. It was not performed entirely but by our team. We have a third-party supplier, but the core banking that we have and run today, it's a proprietary. It's run nowadays by us, and everything on top, including the customer 360 and different parts of the Fibo, were entirely designed and built by our IT team. I think this is the last slide.
Okay. Thank you, Emil. It was very interesting. So I have a question for both of you, and I don't know who wants to go first, but okay, you have presented what happens in the digital world. So we have old clients and new clients. We have 2 types of clients. We have 2 different worlds. Now, you have told us what happens with the new world. What happens with the older clients, the more traditional clients? So how Emil, if you can actually finish what you've been saying. So what happens if you know the old traditional clients who is not digitalized, who is not using how does the system work for, and what happens for those types of clients? And the same for you, Dirk. Yeah. I'm curious because that's how you bridge the 2 worlds, and then the follow-up question would be, what will happen in the future? Will the old disappear, or are you planning to continue those 2 parallel systems?
Okay.
Camille.
Yeah, the first thing that I would like to mention is omni-channel. Our strategy is related, and it's moving into this direction, meaning the following. And I will give you 2 figures. Nowadays, only 1/3 of the loan that we disbursed originated online. So, meaning that the other 2/3 are the usual customers that meet tete-a-tete our counselors. So we are into the direction to have omni-channels for irrespective of the customers. Meaning, if it's a customer that is originated online and he decides to perform all of the activities in online, to perform the self-service flow, he can do it. If it's a customer which is originated offline, visits, recommendation, whatever, we have two options. Either the customer can perform different activities in online, either it's assisted by the sales rep, and within that flow, as exactly what Dirk mentioned, depending on the customer, he can perform one of the activities online. For the other one, or for the next one, he can be assisted by the sales rep. For the next one, he can move backwards in online, and so on and so forth. So we try to make a setup and different flows that will gonna assist the customers, irrespective it's online or offline. And I think this is the strategy and this is the direction. We launched Fibo as a self-service in the first instance. Now we are moving to the assisted flow, describing exactly what I mentioned. Is depending on the customer, on his preference or his abilities, he can perform one step in online, the second one in offline.
So it's a flexible system.
Exactly.
Okay. Dirk, how is it in your situation? We have one question. So the question is for one of
from our side, it's in fact the same. A customer who initiates it through a digital channel there are two possibilities. Either the customer, three in fact, either the customer goes through the digital channel all the way. And what we see today is that indeed it is another customer who initiates the digital channel. That is one thing. But however, you can have a customer who thinks that he can do everything digital, and we have built in some red lights, at which point we can take over and we can take a contact with the customer to help the customer forward. To that, and that can be a punctual intervention. When the customer is blocked and we need to help the customer forward. This can also be an intervention where we direct the customer to, let's say, a physical meeting with an advisor, and then afterwards it can go further physical, or it can go back into the digital flow. And the customer can also choose himself at a certain point in time to step out of the digital flow and afterwards step in again. On the other hand, we have the physical customers coming into the branches. It is very important, and it is something which we will not be able to exclude in the future, because you always have customers who want to be served in a physical way. They really need the interaction with the advisor. This can be at the beginning, and once you say at the beginning, okay, now everything is okay, do you want to step into the digital part? Then we can, in fact, integrate the customer into the digital part. If the customer says no, he can pursue his way with the advisor, but at any point in time, he or she can go into the digital system. But my opinion is that you need both of them, but you will always have customers who will not want to go into the digital. And it is really quite important that this channel is left open, so that customers who really need a personal guidance can be guided in this way. So for us, it is an additional channel, but we have no intention of closing our branches.
Okay, thank you very much. Tristan, if you have a question, unmute yourself and ask the question. If not, I have my last question is actually both of you have actually you have gone in a similar direction, but the question Omro has decided to build their own, and MicroStart actually bought a off-the-shelf program. What motivated you? Maybe Dirk, would start with you. Why did you? Okay, did you consider building your own? Or were you immediately actually the choice was immediate to take what's available?
From our side, we have looked at different topics. So effectively building it our own was one of the possibilities we looked at, together with what is available in the market. There's two topics on that. We want to be, and this is going together with, if you build it yourself, you need to be sure that the people who are building it, you can retain them. because okay, you need to maintain your system, you need to do some maintenance, and effectively it is also it depends, it's quite expensive on what we wanted to do. And if you go into the market, and Singlify is a very young company, and we looked at several systems, but Singlify was quite integrated with Salesforce and was in fact fulfilling our needs to have a 360 view on our customer. And as we were one of the first customers, we could in fact impose at great length what we needed. And this was quite important. Now they are going further. They are also doing some others. But this, and afterwards, it's quite a standard application. And it's also easier if you get updates, new releases, and so on. You remain quite standard. However, it does fulfill the different needs we had. And this is quite important because we want to do as much as possible with, as everybody, a minimum cost, but still have the output you want. And there you have to try to make the match. And sometimes you also have to decide on some topics, are they really important or not? Because people tend to reproduce the past. They always want to have what they had before, even if they don't need it anymore. So, and there you have to make some trade-offs, and you have to look in a very critical way to what people had in the past, to what are we evolving, and what will be the goals, because we also foresee quite an expansion, and we want it to be ready for the future, meaning that our system is, if tomorrow we have 10 or 50,000 customers additional, we are ready. We just need to hire people to see those customers. And this was for us quite important, next to the customer service, who is, we are doing it for the customer. And I would like to come back to what Emil said. The speed of disbursement is quite important. We have an end-to-end. If the customer comes in, let's say today, with the interview, with all the papers, at the latest next week, the customer will have his money on his account. So it's not only the payment, but it's the whole cyclus that takes with us 1 week from a customer that we don't know, that comes into a branch or answers him digitally. The week after it, the money is on his account.
Yeah, thank you, Pam. Emil, how does it look from your side? So do you see any risks in building your own platform? Although what you have presented looks actually great. You have everything that you need, but obviously you have to develop yourself. You have to maintain it on and on, and keep creating more features in it.
Piotr, I think the debate build or buy, it's omnipresent.
It's old story. Yes, that's an old story. Old story, absolutely.
Buy it. So we have this debate in 2019, and we have quite big names on the table. I remember the discussion that we had with Mambu. It was one of our options, but that time, so 3 years ago, Mambu was not that let's say optimistic about our direction. It was not that open to go to not a custom-made solution, but just a small one, because that time we were quite very small. So from economic point of view, it was not feasible. We're gonna spend. We have spent, I don't know, hundreds of thousands of euro, and it was a decision quite economical from that point of view. And the second thing is that we had in mind to build an ecosystem. It's not only about lending. Our plan is more than that. We are targeting to go to even beyond which is a fintech, to go to the neobank direction, and we want to bring different other services that we think are, let's say, huge benefits from our customers. So putting into equation the fact that we didn't have the money to pay, let's say, for the solution from Bamboo, which was targeting larger organization, and the fact that we need different, very specific things, we came up with a solution that we need to build something with a third party. We didn't have our people from the beginning. We just have a limited resources in IT 3 years ago, just to control the direction of the project. Nowadays, we took over. We have the control of the core banking, and we develop almost everything that we need. It's quite expensive, as Dirk mentioned. We have an extensive team in IT, together developers, BA assistants. It's almost 1/3 of the company. So 1/3 sales, 1/3 IT, and the remaining risk administrative part. But I think this is the right way to do it. We'll buy, and we'll choose from time to time different solution, as it's for the KYC and for the e-signature. So for sure, we're gonna opt for different solution and not to be built by us.
Yeah. So what I hear, yeah. So obviously, the build or buy is always a choice. It's a classic dilemma that everybody faces.
Yeah.
And there are pros and cons. And obviously, you're not limited to what the platform is offering, because you can go different ways and you can actually design it in different ways. So what I take from both of you is obviously both options are possible, and there are pros and cons, but you can make it work. The last question, we've gone way over time, by the way.
Yes.
But I really appreciate your patience and time. The last question, Dirk, it's actually to you, and the question is: there are two different. When you look from the customer point of view, do people sort themselves into two different paths? Okay, I'm more traditional, I'm more digital, or do you?
We don't.
How does it work? When the client comes in and hits, comes to Microstat, how does it work?
We don't push them. We have customers who are going to our website and that initiate their demand via our website, and they are digital, so they can go all the way, or they can step out at any point in time in the system. And if they step out, they are automatically directed towards an advisor, which is in the area or where the customer lives. That's one thing. A customer that comes in to a branch can be two ways. That customer effectively wants to be served in a face-to-face with an advisor, or that customer did not consult our website and effectively stepped into a branch. What we do see is that you have two types of customers. You have customers who are very clear in their mind. They know what they want. They have everything available. If you have such customers coming into the branch, you can effectively ask them if they do not want to do it the digital way, as then it goes very quickly. They do not have to have different meetings with our advisors. And you have a lot of people who step in there because, they can do everything at home in a digital way. Other customers say, no, we would like to have the personal contact, and we do not refuse it. And then you have customers that are simply not fit to go into the digital way because they are not used to it. They do not want it. And we serve them in a face-to-face with 1 or 2 meetings because it is, in fact, we cannot forget, and that is a bit the part of the error that was almost made in the beginning. It is not up to you as a company to define how the customer will come in. It is the customer that will define towards you how he comes in. And that's quite important, because if you push the customer in one to another system, if he doesn't like it, he will not stay, he will go away. He will initiate it, and he says, okay, I don't like it, poof, and he will get out. So you need to leave the possibility to the customer, and you can always ask it, and if the customer is willing to do it, okay, there's no problem. but it is the customer who defines it, and that we cannot forget. It you can define the systems, but at the end, it is the customer who will make the choice, not you.
Yeah. So the client chooses. Thank you, Dirk. Emil, how is it the same situation in your case?
Yep, quite the same.
And you don't push the clients and you say, oh, by the way, we have this excellent system. It will save you time. No.
No.
Okay. So in short, you create two paths, two journeys, two options, which basically, if I understand correctly, from the back office work seamlessly. I mean, it's the same process. The processes are no different from the point of view how you originate loans, how you produce the financial products and other services. But the client has choices, and you created opportunities for different types of clients with different preferences or capabilities to access your services. And I think that's the lesson. That's what I hear. How you're evolving. I'm just curious to what extent whether the traditional side is going to be diminishing, getting smaller, or is it going to stay longer? But I think time will show how quickly people will. There probably would be people like myself who always be less sophisticated in technology, and we would want to, for example, use those services.
I think you cannot forget that microcredits, from our side, we also have quite a community of people that are plus 50. But okay, you don't have to be plus 50 to not be digital. So you have in every segment of the population, you have people who do not want to go digital, and they all have their good reasons for that. There's a reason for everything. There's a reason to go digital. There's a reason not to go digital. And in fact, it is showing respect to your customer to provide the customer the possibility to do as he pleases.
Yeah.
And anyhow, for us, it remains the same because our system is the same. What is the difference? A customer that goes digital, it is the customer who does the input in your system. A customer that comes into a branch, it is our advisor who does the work to go digital. So for us, it's the same.
Yeah. Thank you very much. Well, we have gone way over time, but I really appreciate both our presenters and speakers to share their experience, which has been in many ways similar, and which kind of reinforce, although it has been done, and you have done this in slightly different ways, because one MicroStart has developed, she used an existing platform. Omro has gone for developing its own. But actually, the premise, the idea, the reasons that lie behind actually were very similar to accommodate various types of clients that actually live in digital and not so digital world. So this is where I see the differences, and it has been very instructive and illuminating for me, at least, how your organizations have evolved, and that gives me confidence that I think your examples will be very illustrative for other people to follow, to think through how they can actually move more traditional models towards the models that actually involve technology and live in the digital world more than beyond the traditional relationship lending. So I want to thank you, both of you. Apologize for those who have been expecting 1 hour, but it didn't work. The last thing I want to say that next week on the 9th of March, we will be continuing our series on business models in microfinance. We'll be talking about transformation. So we'll be talking about and we'll have the opportunity to see how Finca in Azerbaijan has completely remodeled itself and has done not only traditional kind of piecemeal transformation, but have gone all the way, and then actually revamp the whole organization, and that looks completely different from what it used to be. So for those people who are interested how to do a radical transformation, I invite you to next seminar, which will be on March 9 at the same time at 4 p.m. Central Eastern Time.